Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. Government borrowings plunge 65% in September as public spending cools sharply amid tighter fiscal controls. The Philippines eyes stronger trade and investment flows as upgraded ASEAN pacts usher in a new era of regional cooperation. The U.S. and China strike a trade framework deal, averting a 100% tariff showdown, easing global tensions. First, let's take a look at how global financial markets performed last Friday. Major U.S. stock indexes hit record highs after inflation came in lower than expected, boosting bets on a Fed rate cut. The Dow, S&P 500, and the Nasdaq all closed at new all-time highs, while the dollar index was little changed. Data showed U.S. consumer prices rose less than forecast in September, strengthening expectations that the Federal Reserve will cut rates at its meeting this week. Markets now see 2 more rate cuts this year, with one likely next week, according to LSEG data. The Dow Jones Industrial Average picked up 1%, the S&P 500 higher by 0.8%, and the Nasdaq up by 1.2%. Over in Europe, markets closed mixed. The UK's FTSE 100 higher by 0.7%, Germany's DAX up by 0.1%, and France's CAC 40 flat. Here at home, the government is borrowing far less, a sign that public spending has slowed sharply. Gross borrowings by the national government dropped by 65% in September as the Treasury tightened new loan inflows. Treasury data showed total gross borrowings fell to 128.9 billion pesos, down from 367.2 billion in the same month last year. Month-on-month gross borrowings slid by 74.65% from 508.5 billion in August. Domestic borrowings, which made up over 93% of that total, declined 17% to 120.5 billion pesos. External borrowings, mainly project loans, plunged 96% to just 8.4 billion. ASEAN trade deals just got a major upgrade, and the Philippines stands to gain from stronger regional trade and investment flows. 2 key agreements, the ASEAN-China Free Trade Area 3.0 and the amended ASEAN Trade in Goods Agreement, aim to modernize how the region does business. The new deals will streamline trade through digital certifications, faster cargo clearance, and simplified documentation for Philippine exporters. Meanwhile, the Philippines and Canada target 2026 to seal their own free trade agreement, focusing on manufacturing and clean energy. Together, these initiatives signal ASEAN's push to deepen global partnerships and strengthen economic resilience and sustainable growth. The Bangko Sentral ng Pilipinas is moving fast to keep cash flowing in calamity-hit areas, rolling out new relief measures for banks and their clients. The package includes financial aid for affected staff, longer grace periods for borrowers, and payment deferrals for agricultural loans. Branch operations in disaster-hit areas may be temporarily adjusted without prior BSP approval to ensure liquidity. Banks not yet enrolled in BSP systems like PhilPass Plus or the regional operations subsector may withdraw funds directly from BSP regional offices. Overall, the new rules are meant to help banks and communities recover faster and keep local economies alive after calamities. Now, the government is moving to ease the tax burden on Filipino workers as public outrage over DPWH corruption puts pressure on officials to deliver real relief. Finance Secretary Ralph Recto said that the Department of Finance is reviewing existing de minimis benefits or small value employee perks to let workers take home more pay without raising their tax bill. Recto said that the proposal would let Filipinos feel the relief directly by increasing tax-free ceilings for everyday allowances. Under that plan, medical cash allowance for dependents would rise to 2,000 pesos per semester from 1,500 pesos. Rice subsidies would climb to 2,500 pesos a month from 2,000. uniform and clothing allowance to 8,000 and 8,000 a year from 7,000 pesos. Other increases cover medical aid, laundry gifts, productivity, and CBA incentives. President Ferdinand Marcos Jr. said that the adjustments would have minimal impact on revenues but make a meaningful difference for workers. The DOF is also studying new exemptions from withholding tax requirements and ways to simplify tax rates to cut compliance costs. The race to go nuclear is gaining momentum as the government explores new ways to finance its nuclear energy shift. The Philippine government is moving closer to its energy goals, beginning talks on funding options for future nuclear projects. The Department of Energy gathered experts and industry representatives to discuss ways to raise capital for such initiatives. The talks were held during the National Workshop on Nuclear Power Infrastructure and Financing in Manila from October 20th to the 24th. Energy Undersecretary Giovanni Carlo Bacordo said that the meeting would help chart a clearer pathway forward. The Marcos administration aims to include nuclear energy in the country's power mix by 2032. A massive crackdown in Myanmar has left more than 200 Filipinos behind bars, and the government is now racing to bring them home. The Department of Foreign Affairs confirmed 222 Filipinos were arrested during a military raid on scam hubs in Mayanwadi near the Thai border. The operation targeted KK Park, a notorious compound linked to cybercrime syndicates using migrant workers for online fraud. Myanmar's military detained over 2,000 people and seized 30 Starlink satellite devices allegedly used to run the scams. So far, 66 Filipinos have crossed into Thailand and are being processed by Thai authorities, while 9 remain in custody in Yangon. The DFA and the Department of Migrant Workers are working with Myanmar and Thai officials to fast-track clearances, a process that usually takes 3 to 4 weeks. The DFA says it is fully committed to the safe and speedy repatriation of all affected Filipinos. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on how Asian markets are doing this Monday morning. Right now, I'm seeing a sea of green. The Nikkei 225 is higher by 2.3%, starkly higher in early trade. The Hong Kong Hang Seng Index is higher by 1%. Shanghai's Composite up by 0.8%, and Singapore's Straits Times Index up by 0.4%. Here at home, the Philippine market ended Friday in the red as a softer peso and growing concerns over the country's fiscal position are weighing on investor sentiment. The PSE index dropped 1.1% to 59.88, falling back below the 6,000 level. Market watchers say the sell-off was driven by the peso slide towards 59 to the dollar, its lowest level since late 2024, alongside weaker government revenue and spending data. Global factors also added pressure from escalating trade tensions among the U.S., China, and Canada to higher oil prices following Washington's new sanctions on Russian firms. For now, analysts expect trading to remain cautious as investors watch currency moves and fiscal signals from the government. A stronger peso and clearer assurance of fiscal discipline could help lift confidence and push the index back above the 6,000 level. Right now, let's take a look at our market today. As of 10:10, we are seeing a picture of weakness in the PSC. Right now, the main gauge is lower by 0.6% to 59.55, falling further below that 6,000 mark. All shares index down by 0.3% to 35.96. All the sub-indices are trading to the downside, with the mining and oil counter down the most, down by just a little over 1%. Total volume is at 10 billion, total valued at 14.44 billion pesos. Market breadth is is bearish. We've got 65 decliners, 51 advancers, and 60 stocks unchanged. Taking a look at the currencies, the peso opens at 58.60 against the greenback, unchanged from its previous close of 58.63. Now, the Philippine stock market continues to lag behind its ASEAN neighbors, a sign of weak investor confidence and low trading activity. According to the Business Times, Vietnam's market now trades over $1 billion a day, while the Philippines does only about a tenth of that. Thailand leads the region with an average daily trading value of $1.3 billion. Investors say confidence depends on trust, and trust depends on transparency. As capital flows shift across Southeast Asia, one market is clearly lagging behind: ours. Vietnam's stock market is now one of the region's busiest, with daily trades topping $1 billion. The Philippines, meanwhile, trades at only about a tenth of that volume. Data from Bloomberg shows local trading value hovering around $100 million a day, far behind Vietnam, Indonesia, and Thailand. Analysts say investors are staying away because trust in our system, from regulation to governance, remains weak. Joining us now is Jomar Lacson, the head of macro and sustainability research, to help us understand why the Philippines has fallen so far behind our neighbors and what it could take to rebuild confidence in the market. So, Jomar, thank you for being with us. Jomar from ATR Asset Management. Jomar, the PSC we've fallen further below the 6,000 level.
Right.
The peso is not the picture of strength. What's driving this slide in your view?
Well, there are, I guess, multiple factors behind the recent performance. I think chief of that is for the peso. We've already experienced that, wherein when the peso becomes volatile, it does affect the dollar returns of foreign investors. So this creates a little bit of, a risk factor for them. But if you look at the peso, it's one of the key reasons why it has weakened is that, in our view, there's expectations of a timing difference between the speed by which our central bank is cutting rates and that of the U.S. And what our view is that we'll have to maintain certain independence. The concerns of the Philippine economy is a bit different from the U.S. Growth is actually a bigger concern, I think, for us going into 2026, and that's the reason why we think that the central bank's position of cutting rates in a bit more aggressively, or they're being more accommodative, is actually a correct move on that part. Now, what it does mean, though, is that the differential between U.S. rates and Philippine rates is narrowing. And that means that between Philippines and, say, the U.S., the trade-off between risk and return seems to be more in favor of the U.S. And that's why you may see that peso moving a bit away from the Philippines, meaning it's weakening.
The bourses in Asia are in the green, up sharply today, as concerns over the trade war between the U.S. and China are cooling. Our market going the other way. How much of this current weakness stems from the trust deficit, given all the corruption allegations and the political risk associated with the Philippines, Jomar?
Yeah, so I think the primary factor would still be the interest rate differential, how the expectations on where we're headed. But when we look at what's happened, and I'd probably just rephrase it as sort of like how trust goes into a political risk model. So the question here is whether our foreign investors look at our country with with a heightened level of country risk or political risk. And it may, over the past month, the issues with corruption in the infrastructure projects may be enhancing that political risk, because it does suggest that there is some, we need to review our institutions, how strong are the institutions to protect themselves for governance issues.
Yeah, begs the question, where are we headed? The main gauge is now down sharply, down 1% to 59.31. Foreign outflows year to date are at $750 million US. What does this picture tell you? And is the momentum to the downside?
Well, what's important is the growth aspect. For us, that what we need to show, apart from, of course, that the support for growth will be there. And that's the reason why we think one of the concerns we're headed into 2026 is, given all that we've learned over the past month in Congress, and what are the actions being done by government agencies. Because our experience in 2010, when we did, when there was a governance sort of a review, the policy was sort of like to review everything. Let's stop spending for a moment and let's see first what has what are the governance issues, or is there any corruption here? And what we saw was that there was a contraction in government spending.
Yes.
And that takes out one engine of growth from the economy.
A very chunky engine.
But now, we need to find out when it comes to, I guess when the GDP results come in November, is whether we're now also seeing that. We don't have any evidence at the moment, but we do have our anecdotal evidence that agencies are now reviewing, because we now know what to look for. Okay, given the what has been discussed in Congress, we know sort of there's a pattern. So I think that's now where we're now looking at each of the agencies, maybe. But when we've seen so far in investigations or certain pockets.
Yeah.
Hopefully
yeah.
that's not too broad.
Yeah, people are factoring it in. They're factoring in the effect of the cut down on government spending. That's going to be pretty chunky. Q3 GDP right now projected at around 5.2%. It's a soft patch. Do you think this is a sign that momentum moving forward is going to be slipping, coupled with the big slowdown in government spending?
Well, would we already assume this, that there is some slowdown, because the behavior of the government we assume that it will be similar to 2010. So what's important here are the rate cuts being done by the central bank, by BSP, because if one engine is sort of like taking a pause, reviewing, I guess internalizing, what we need is another engine to come out. And that's what has been sort of missing over the past, 8 quarters, is the investment side. And the interest rate cuts are sort of designed to get the private sector now moving to sort of like put more grease on the wheels for the business sector.
Yes. The BSP has cut rates of 4.75%, with another move in December on the table. Do you expect further easing, and how far can rates go in 2026 without pushing pressure on the peso, which is already hovering at 59?
Well, our view is really that they will continue to cut, because it's important. Growth is our issue for the domestic economy. But having said that, we also believe that the Federal Reserve will also start cutting their own rates. So there's just a timing difference for us, meaning we might actually see this weakness in the fourth quarter, but once the Federal Reserve starts cutting, then the interest rate differential will start widening again, and this will now sort of stabilize the peso.
Okay, so we've got a growth issue. The December cut on the table, you think that's baked into the cake, a 25 basis point cut in December, Jomar?
Okay, sorry, can you repeat that?
Do you think that's baked into the cake, 25 basis point cut in December?
Yeah, I think we already made, in our forecast, we already assume a 25 basis point cut for December. Having said that, the peso is still, it can still be managed. I'd just like to point out that we have sufficient international reserves to stabilize the peso at this point. So we do believe that in this interim, I guess the temporal volatility will be managed by the BSP.
Okay, Jomar, thank you so much. That's all the time we have for this. But thank you for being here with us.
Thanks, Maiki. Glad to be here.
Okay, when it comes to electrified mobility, the country's Bilyonaryo-backed auto players are firmly in the fast lane. At this year's Philippine Electric Vehicle Summit, they showed they're not just plugged in, they're fully charged for the road to the future. Our mobility correspondent, G. Baroga, gives us the highlights.
Bilyonaryo-backed auto players in the country made sure to show up and show off at this year's Philippine Electric Vehicle Summit. Among them was AC Mobility, owned by the Zubel de Ayala family. The group isn't just rolling out new energy vehicles, it's also working to build an entire ecosystem to keep the local EV industry running smoothly.
For us, energy is more than just power. It is the confidence and freedom to be able to keep moving forward. And this same mission charged us to continue to build a reliable EV network for Filipinos.
After letting go of a few distributorships, the company is staying true to its mission of accelerating sustainable mobility and electrification. The newest addition to the local lineup is the E-MAX 9 DMI, a premium MPV that marks BYD Cars Philippines' fifth vehicle launch this year.
We're focused in providing mobility, electric mobility to the Filipino consumers. We want everyone to experience what BYD can offer to our market.
BNC Mobility was among the first to get behind the wheel and try out the vehicle before its official rollout.
Seat vents are there as well.
Are there different types of massage also?
Yeah.
Meanwhile, BYD's sister brand Kia gave a sneak peek of the EV5, its third fully electric model for the Philippine market. It is set to officially roll out by the first quarter of 2026.
We're really looking at reigniting the portfolio of Kia, and this is one of the first steps. So in terms of HEV, I think we're quite a strong player in that segment. We're also boosting that segment.
Also making its presence felt was United Asia Automotive Group, led by Romel's C-Team, showcasing all 6 brands under its wing.
Apart from the many brands, the many offerings that we have that caters to different segments and different lifestyles, what we want to focus on a lot more is the customer service.
It wasn't just car makers in the spotlight. Electrical firms like 55-year-old Power and Equipment Supplies Inc. or PESIN were there too.
We are offering an e-mobility solutions. It is a complete solution from hardware to software. So we're offering from AC chargers, DC chargers, all that you need in order to have a charging station.
The road to electrification is gaining speed, and with the country's biggest industry players fully charged, the drive toward a cleaner, smarter future is well underway. For BNC Mobility, G. Baroga.
The U.S. and China reach a trade framework potentially preventing Washington from slapping a 100% tariff on Chinese imports. U.S. Treasury Secretary Scott Bessent says China agreed to delay its expanded export controls on rare earths for a year, following 2 days of trade talks in Malaysia. U.S. President Donald Trump is expected to meet Chinese President Xi Jinping in South Korea this week.
The president had given me maximum leverage when he threatened 100% tariffs if the Chinese imposed their rare earth global export controls. So I think we have averted that so that the tariffs will be averted.
And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo news channel, and have a good week ahead.